when looking at October, November 2013, we're looking at the cash flow question. Always focus on the required first, because then you know which sections to draw up. Right, so in question 3, they're asking you to draw up which sections?
Operating and financing.
And if it's according to the indirect, which section is going to be indirect?
Operating.
Operating. Right, so all we're going to have to do is we're going to have to draw up a heading for what?
We're going to have to draw up the headings for cash from operating activities. Then we're going to need profit before tax, then adjustments, and then cash generated from operations and the net cash from operating activities.
Okay, good. So you need the profit for the year. Okay, then you'll have adjustments.
Yeah.
Then you need a heading. Cash generated from operations. And then we need another heading. Cash for the period. Okay, so we're looking for the cash flow from operating activities. Okay, so that's what we're looking at here in terms of indirect. Okay, obviously cash from financing, it's literally just one heading and a total. Okay, whatever the total is. Makes sense?
Yeah.
Okay.
I'm just writing it down. Okay. Then
Now what?
now we have to look at our additional info.
Correct. Okay, so we start with the additional information. We need to read it and we need to find items that will have cash flow. Okay, so number 1.
Okay, the fixed deposit was made on the 28th of February 2013.
Did it go up or down?
I'm just seeing. Fixed deposit, it went up.
Operating, finance, or investing?
I would think financing.
What is the fixed deposit?
I don't actually know.
A fixed deposit is an investment whereby you are taking money and you're saving it for a specific term.
Okay, yes.
So what is it viewed as?
Well, that would be investing, so we wouldn't need it.
No, a fixed deposit would be an asset.
Oh.
So if it's an asset, it will be investing, yes. Okay, so then you won't need it, correct. Next.
Okay. Then the loan of $75,000 was acquired on the 1st of November 2011. Interest is charged at 12% per annum and is capitalized. We will need that.
Why?
Because it's financing.
Yes. Okay, so we need to work out the amount. Right, remember, interest is capitalized, so what does that mean?
Doesn't mean that it was paid.
Interest is capitalized, it means it isn't paid.
Oh, it isn't paid.
Okay, if it's capitalized, it's added to the balance of the loan.
Okay.
Okay, so what is the balance of the loan?
The balance of the loan is none. Let me just work that. Sorry. 9,000.
No, the balance on the loan is 75. When did I acquire the loan?
Oh, on the 1st of November 2011.
Okay, so 1st November 2011 is the loan. Okay, what years am I looking at here?
2012 and 2013.
Yes. Okay, so how much interest would have been added to the loan from 1st November 2011 to the 28th of Feb 2012?
November, December, January, February. So it's 3 months.
Okay, so work out the interest.
1,000.
75,000 times the rate times the time.
That's 2,250.
Are you sure about that? It's November, December, January, February. That's 4 months.
Oh, 4. Put it as 3. Then it's 3,000.
Yes. Does 75,000, okay, 75,000 plus 3,000 give you 78?
Yes.
Yes, so it's capitalized. Do you agree?
Okay, yeah.
Okay, so now take 78,000, okay, times that by, what is the percent? 12%. What is 78 times 12%?
9,360.
9,360.
60.
Okay,
Yeah.
so what do we have here as interest? Okay, the interest is only 9,000 here, not 9,360. Okay, but because this was a loan of 75,000, it was acquired on the 1st of November, interest is charged at 12% per annum. So if it's 12% per annum, you'd be capitalizing the interest.
Yeah.
Okay, so how much interest would I have in the 3rd year? Or in the next year, this year?
Well, 9,000.
Well, 9,000 is the interest they've provided for, yes. Okay, so did they say any interest still needs to be provided for? No. Okay, so we would then add 9,000, okay, to the actual amount. So did the loan change?
Yes, it did.
No, it didn't. It didn't change. Okay,
Oh,
what's
no,
78 plus 9? 87.
Yes.
Okay, so
Okay.
did we pay off the loan?
Yes.
Yes.
No, we haven't paid off the loan.
But we still owe it plus the interest.
Exactly, but the loan went up. Did you take out a loan?
Well, okay, the loan of 75,000 was acquired on the 1st of November 2011. Interest is charged at 12% per annum and is capitalized. That's the only information it's got on the loan, and it was taken out on the 1st of November 2011.
Yeah, so did you take out the loan?
Yeah.
No, you didn't take out a loan because the loan balance went up because of interest, not because you took out more.
Okay, sorry. So you just had to pay the interest back as well as the full amount of the loan.
Okay, so the answer here is actually 0 because they said interest was capitalized. Okay, so just a note here. Yes, the loan amount went up, but it was because of the interest being capitalized. Okay, so if the loan is going up by interest that's being capitalized, you're not incurring any additional debt. There's no inflow or outflow in terms of the loan.
Okay.
Okay, next.
Okay, no land and buildings were purchased during the year. 50% of the selling price of land and buildings was received in cash, whereas the outstanding amount was in credit.
Where would that go?
Under financing activities.
No, financing.
Investing.
Why?
Property, plant and equipment, PPE.
Exactly. Okay, next.
No furniture or equipment was sold or scrapped during the year. All purchases were paid for in cash. Would that be...
What purchases? No furniture equipment was sold or scrapping during the year. Isn't that just extra information because it's PPE?
PPE, which goes where?
Investing.
What did they ask for in this question?
No furniture. It's asking for operating
And?
and financing.
So we don't need it.
Okay. All purchases of inventory were on credit. All of the other expenses except the accrued expenses were paid in full. So
That's basically also just extra information.
Really?
half of it.
Which half?
The half of all purchases were paid in credit. All of the other purchases except the credit, or the first part.
Okay, the first part is important. Why?
Because it's saying how the inventory was paid.
Yes, it's on credit. So is that a movement in a balance?
Yes, it is.
Yeah.
Operating, finance, or investing?
Operating.
What happened to your inventory?
It increased.
Increased or decreased?
All purchases on inventory were on credit. Won't it increase?
It will increase.
Yeah.
Okay, so inventory has increased. So what happened to the cash flow? Positive or negative?
Negative.
No, it didn't increase or decrease. You're looking at the wrong balance. Inventory.
Yes.
Inventory decreased, not increased.
Yes, it decreased.
Oh yes, decrease.
Okay, that line. Agreed?
Yes, agreed.
Inflow, outflow.
Outflow.
No, inflow. If inventory decreases, you would have sold it.
Okay, sorry. Okay.
Okay. Decrease in inventory. Got that?
Decrease in inventory, yeah.
Next.
Okay.
The accrued expenses, hey?
Yes. So
Right,
all of the
so all other expenses were paid for in full except the accrued expenses. Right, so we need to look at the accrual. Alright, so what accrued expenses do you have? Salaries and wages.
Yes.
Okay, increase or decrease?
It was an increase.
Inflow, outflow?
Outflow.
Are you sure?
Well, salaries is going to decrease your amount, so won't it be an outflow?
Okay, but remember, this is an increase in a liability. So
But
an
it's a
increase in a liability would lead to an inflow because you don't have to pay.
But why wouldn't you have to pay?
You haven't paid because it's an accrued expense. You're still going to have to pay.
It's owing.
It's owing, yes. Okay, so an increase in a current liability is seen as an increase in cash flow because you're adjusting your profit for the year for these non-cash items.
Yes.
Okay, next.
The drawings balance on the 28th of Feb 2013 for Montreux and Blue amounted to 201,600 and 175,800 respectively. These amounts related to salaries paid to partners during the year.
Good. Operating, finance, or investing?
Operating.
Good. Where?
It's going to go under salaries and wages, and what you're going to do...
Partners.
Oh, sorry, I'm thinking of CC, sorry.
No, partners. So, it's partnership question. So, what is this viewed as? Drawings. Does drawings
yeah.
get disclosed in your operating?
Yes.
Yes. Under which heading? Distribution to partners or drawings from partners or for partners?
Distribution to partners.
Yes. Okay, so I'm going to show that here. distribution to partners, and an amount of minus 37740. Add the two amounts together. That's all.
Yeah.
Okay, this was a short question. It wasn't that long. Just lots of accruals.
Yeah.
What else?
Okay.
Okay, maybe just to show you something else as well. You could have drawn up the current accounts if you wanted to, but it's not going to make much of a difference because you'll see you get the same balances. Okay, so you don't have to do this, but I'm just going to show it to you. Okay, here's current M and current blue. Right, remember, what does drawings do to their current accounts? It decreases it because their current account is this is the entitlement for entitlement of the partners. Okay, that's what they're entitled to. So when you draw from the business, it will affect your current accounts. Okay, because they didn't give you drawing accounts there. Okay, so drawings would have come out of current, and then you would have had those balances, and you could have worked out the difference. You would have seen the drawings is what they've given you in the question. So again, in this scenario, UNISA actually gave the answer in their question because they told you how much the drawings was.
Yeah.
Okay, next.
Then it is inventory at disclosure cost.
Inventory is always disclosed at cost, right?
Yes.
So, additional information. Next.
Okay, the debtors control balance as at 28th of Feb 2012 comprised of trade debtors only. The debtors control balance as at the 28th of Feb 2013 includes trade debtors and a debt in respect of the sale of land and buildings.
Okay, do I need this?
Yes.
Correct. Why? I need to adjust for that. Land and buildings purchase, or the sale actually, not the purchase, the sale.
Yeah.
Okay, so am I going to have to draw up a T account for this one?
Yes.
Yes, I will. Okay, so debtors, debit and credit. Okay, let's revise a bit and then you guys can find the figures. Okay, give me balances, give me stuff to put in this account.
Okay.
Well, the debtors control the opening amount was 1,100,000 and the closing amount was 210,900.
Okay, what else? Give me more. What else do you know?
Well, I know the creditors control amounts as well.
Okay, you don't want creditors, you're looking at debtors.
Yeah.
Okay, the question talked about sales, right?
Yeah.
Are
So
you going to
you
put
need
sales and debtors?
you need revenue.
Yes, you do, yes. How much is it?
750,900.
Correct. What else? They mentioned that in the adjustment. What happened to land and buildings?
Land and buildings at cost. It was 435,000.
Okay, but did you sell land and buildings?
It says profit on sale of non-current asset land and buildings you did. It was 15,000.
Okay, 15,000 is the profit on the sale.
Yeah.
Do you agree?
Yes.
So, how much would you have sold, and how much of it was credit? Look at the question. What did the question say about land and buildings?
Yeah.
We saw this earlier. 50% of the selling price of land and buildings was received in cash.
Yeah.
Here, they said the debtors' closing balance includes trade debtors and the debtors in respect to the sale of land and buildings. So is that important? Yes, I need to consider what I read up here.
Okay.
Does that make sense?
Yes.
Okay, so you do need the land and buildings in terms of the profit and loss here for the sale, because you're trying to determine how much was actually received from your debtors. Okay, so what is the land and buildings going to do to the debtors control account? Increase or decrease it?
It's going to, it will increase it.
It'll increase it because you're still owed, so this will have come from the land and buildings asset realization.
Yeah.
Okay, the realization account is going to have an amount of, well, let's work it out. Okay, so what was the opening balance for land and buildings?
The opening is 615,000.
Yes, 650,000 is what you started with. Okay,
Yes.
did you sell land and buildings?
Yes.
Yes. Okay, what's the end balance?
435,000.
Okay, 435. Okay, is what you ended with. So the movement is what you would have sold. Do you agree?
Yes.
But you also made a profit of how much?
15,000.
Correct. Okay, and then half of it is what? Credit. The other half is cash.
Yeah.
The other half would have been which section? Operating, finance, or investing?
Investing.
Yes. Okay, I'm not going to look at that. I'm only going to look at this because half of it affects the debtors. Does that make sense?
Yes.
Can you now work out the total?
Yeah.
Yes, you can. Okay, so if I add up those amounts here on the left, I'm going to get that answer. This minus that gives me bank. Operating, finance, or investing? Operating.
Yes.
Okay, 7,485,000 is going to be an increase or decrease in debtors. What happened to debtors?
Debtors was on the credit side, so it went
down. Decrease in debtors, inflow, outflow, inflow.
Okay.
Got that.
Yeah.
Next.
Okay. All capital contributions were made in cash.
Do I need it?
No.
Ooh. Think about it.
All capital contributions were made in cash.
What is a capital contribution viewed as? Operating,
Oh, no.
financing, or investing?
Capital, so it would be
Financing.
Yes. Do I need it?
Yes, you do.
Yes, I do. What happened to the balance? Did it go up or down?
Where is it? All capital contributions. Where's capital contributions?
it went up.
We're done.
So, inflow, outflow.
Inflow.
Good. What's the amount?
We need to work.
Difference, eh?
Yeah.
Okay,
So they
the one figure minus the other gives you that amount.
Yes.
Do you agree?
Yeah.
Okay. Have you looked at all the dish information points now?
Yes.
Yes, you have. Okay, so now we need to go back and we need to look for more operating and more financing. Do you agree?
Yeah.
Okay, so let's start with capital. Have we looked at those two? Yes. Have we looked at current? Yes. Have we looked at land and buildings?
Yes.
Okay. Furniture and equipment? Yes. Accumulated depreciation, do I need?
Yes, you do.
Yes, I do. What was the movement?
1,800.
Good. Did you have the depreciation here Yes, there's it there.
Okay.
Okay, is this important for an indirect question?
It is.
Very important. Make sure you don't forget it in an indirect question. Get your easy mark. Alright? This question didn't ask you to work it out because it was given.
Okay. Yeah.
Makes sense?
Yes, it does.
Okay, next.
Okay, inventory we looked at. Bank we don't need to look at.
Yeah, bank don't need because it's only for the net increase and decrease, which is at the bottom of the cash flow statement, which wasn't asked for.
Okay, debtors we looked at. Long-term loan we looked at. Creditors control we need to look at.
Good. What happened to creditors control?
It increased.
An increase in creditors is an inflow and outflow.
Outflow.
No.
Oh,
Increase.
an
Seen as
inflow.
financing, yes. Okay, they're financing your purchases, so it's an inflow. What else? Keep going.
Okay, accrued income, rent receivable.
Do we need?
Yes.
It's a current asset. What happened to it? Increase or decrease?
Decrease.
Good. So that's seen as an inflow. Decrease in the current assets.
Okay, I just need to write this in quick. Decrease in accrued. Okay.
Keep going.
Yeah.
What else?
Okay, then we have accrued expenses, salaries and wages. We looked at that.
No, we haven't.
Oh, never
We didn't
mind.
look at it. Oh, we did look at it. Sorry, you're right. Okay, I didn't see it. It's at the top. Accrued expenses, line number 2. Yeah. Keep going. Next.
Okay, then the fixed deposit we don't need because it's
It's investing. Good.
Okay, revenue we've looked at.
Good.
Cost of sales.
We haven't looked at. Okay,
No.
did this question give you a profit before tax or a profit for the year?
No, it didn't.
No. Must you do a working?
Yes.
Correct. Okay, so do I take revenue and cost of sales into consideration working out the profits?
Yes, you do.
Okay, what's the next line item?
Rental income.
Do I need it?
Yes, you do.
Yes. What else? Next.
Profit on sale of non-current asset, land and buildings.
Do I need that?
Yeah, but didn't we look at that already?
But it's a non-cash item.
Oh, yes.
So adjust. Okay, remember, in an indirect question, you want non-cash items. Anything that's non-cash is important. Makes sense?
Yes. On sale of an asset. Okay.
Makes sense?
Yes.
Okay, so you do need to look at it and you need to provide for the adjustment. It's a non-cash item. It'll be part of the adjustments against your profit for the year.
Okay.
Would you take that into consideration when working out the profit? Yes, you would. Okay, next.
Okay, administrative expenses.
Do I need? Yes.
Yeah.
Next, depreciation we looked at, right?
Yeah, an interest expense.
Yeah, depreciation will affect this calculation for profit for the year. And then we had interest expense, right?
Yeah.
Okay, so do you agree if I work out the profit for the year, I'm going to get an answer of that, 362. Where is that going to go? Part of your operating activities. Do you agree?
Yeah.
Okay, so that's going to go here, profit for the year, brackets 362760. Okay, then earlier in the semester we spoke about this, the accrual. Is the profit for the year going to be seen as an accrual? Yes, because all of these accruals are provided for in the actual profit for the year figure. This interest expense, is this interest expense special? Yes, it needs to be disclosed separately under cash generated from operations after that subheading. Do you agree?
Yeah.
Did we pay any interest? No, because interest is capitalized. Right, so interest paid would have been 0.
Okay.
Okay, because interest was capitalized. Must I add back the accrual? Yes. So if I add back 9,000. Okay, do you agree I take out the 9,000 because the 9,000 is there?
Yeah.
Because you're taking out the accrual to show how much you've paid. Have I paid any of it? No, I haven't. Alright, so profit for the year then is going to be an amount of 371,760. That's the profit for the year. Okay, based on what you've got in the question. Okay, so all you have to do is provide for adjustments in your assets and liabilities, income and expenses. Okay, and you're looking at cash. Okay, we're not looking at accruals. We're trying to take out the accruals. That's what we're trying to do.
Okay.
Is that alright?
Yes.
Okay, and then we just need to total up.
Yeah.
Okay, so cash generated from operating activities is going to be the cash generated from operations minus that. I need to sum up this. Sum up all of that. Okay, so I get that answer.
And one.
Okay, so indirect's a bit different because you're changing your thought process a little bit because you're looking for non-cash items that you need to adjust or provide for in the actual adjustments part of the profit for the year. Okay, because remember, profit for the year is going to include everything. Profit for the year is a separate calculation which you need to work out here because it's all of those separate line items to get one figure that has to be adjusted for in terms of your non-cash items or movements in current assets and liabilities.
Yeah.
Okay. Your financing, to sum up,
7,600.
gives you that. Okay, that was the question.
This one was quite a short one.
Yeah, it wasn't too bad. Okay, it all depends on the level of complexity in the question. They talked a lot about investing activities. Okay, but I don't know why they didn't test that. They tested financing, they tested operating. They gave so much information about investing, but they didn't really give you that section. You only had to disclose 2 sections, operating and in financing. They didn't ask for investing, so we wouldn't have to worry about it.
Yes.
Okay, happy?
Happy.
Okay, so that's indirect, and now we've looked at direct as well.
Yes.
Any questions about the cash flow?
No. Just need to practice.